Morning, how you doing? This is Coach Ernie, and it is Thursday, February 27th. I'm running a little bit late today. I wrenched my ankle, got up late. Actually, I didn't sleep because of it. Got up late, couldn't put together a special for you. Apologize. So we're just going to get to the meat and potatoes here and move on. That's my disaster recovery plan. But thank you very much for joining us. We're here to look at what our setup's going to be for today's out-of-the-money butterfly. We're taking asymmetric risk to reward, trying to capture premium and directionality on that last day, or that last day of expiration. I had to think, last day? Of course it's the last day, because we expire every single day of the week. And we do that on the SPX, the NDX, and as well as futures for the indexes. So what we're looking to do today is, or every morning, is look at the VIX so that we can figure out the width that we should do. And the reason for that is we're looking at premium decay. Premium decay rate is determined by where volatility is, and when volatility is very high, premium decay delays, leaving an extra amount of premium available. And when VIX is low, premium decay is very rapid. It accelerates, leaving less premium to collect. And so we adjust our flies accordingly. We're also going to look at the market direction, because we are directional traders. I noticed that this morning the market was up a bit and volatility was dropping a bit. So it's been a little bit different today than previous days this week. And then we'll look at market structure and see where a move is likely to happen. So this is one of those days you got to wonder, market's up a bit. We had kind of a wonky day yesterday, up and down. You know, is my market direction solid? You still have to go with what your analysis tells you. And I'll talk about that in a little bit. But the very first thing to do is go to the charts. All right, here we are with the VIX, and we can plainly see that it has dropped a little bit. It was as high as, got up to 21.5 yesterday, but now it's down to 17.87, threatening to leave the Goldilocks zone. No, don't say it's so. But the reason why I act that way is that when we go into zombie land, just the way it sounds, it's not the best trading environment, but we've been having really good luck so far this week. So I'm confident. I'm confident that we're going to get some more volatility injected into this market. In any event, we're still above the blue line here and into Goldilocks 1. So we are still in the Goldilocks zone. That is something to be thankful for. And we're going to look at whether or not we should be 25, 30, or 35 wide by going to the big ass fly. Love saying the big ass fly. So we will go off to Thinkorswim, check out our at the money E-mini S&P futures, and see where it lies right now. And we can see that the big ass fly is a 50 wide at the money. It lets us gauge what the market is pricing options that morning, and particularly considering that we have the GDP coming up and unemployment and a number of other potentially impactful reports. It is showing that there is a fair amount of volatility this morning, and our debit on that big ass fly will fluctuate anywhere from a low of 5 to as high as 35. 35 meaning that it's sitting super low, the debit's very high, very little profit potential, meaning that volatility is very low.
Did you try again?
I'm not talking to you, Siri. She's a pain. Right now, it's at the debit is at 20, so it's well below our threshold 25, where we consider to take this as a trade as well. So this morning, we will be putting on a big-ass fly, hoping to capture all that extra premium. When the debit gets down to a certain level, it while we are normally after asymmetric trades, this presents a a really smart opportunity after GDP is released to look for that volatility crush. Profit potential is big enough and gamma is flat enough that it gives us a really good risk to reward. But it is really the only strategy where we put on a stop. And if you're interested, I have a lengthy comparison of the big ass fly with other similar trades. One called the Jim Olsen iron fly. If you're interested in that comparison, I have a document that does a full analysis of the two, and then you decide which one you would rather trade. All right, but anyways, we're at we're a little bit under 20 now. I would imagine it's going to increase a little bit while we go into the GDP report, which is coming up in about 21 minutes. So let's go back to our VIX. And clear to see that something that's 19 or so is on the wider side of our range. So we'll be looking at 30 to 35 wide out of the money flies this morning. Yesterday we had a fantastic opportunity for a trade, and I'll talk about that in a moment. Let's see. Okay, next step is to go to look at our market direction. Now, yesterday we had a pull-up. Well, no, we were very undecided yesterday. It was a red day still, but this morning you can see that we're pulling up. I'm still calling directional bias as bearish. Does that mean that we're going to be bearish? I really don't know. Today could be a bullish day, and in fact, already in this morning we're pulling up. So we'll have to play this by ear, but I'm going to start off bearish. I could change. It really depends on where the market goes, but we'll start off with put flies. Now that could change right after the GDP report. We'll see, but that's the way we're starting off. And then the market structure, you can see the market has definitely risen overnight in the Globex overnight market. We're at the bottom of a node. We've entered a volume profile node. Let's take a look at what that looks like. And we'll go to our 3-hour chart. We will turn on volume profile, turn off all the chicken scratch. And let's see, we need more profile. More profile. All right, there we go. So, right, so we just entered this area, this minor volume node. We traveled through overnight through this low liquidity area, so it held little resistance for us to move from this larger volume node from yesterday and into this what I call a child node. We can see resistance you're going to find at each of these deep crevices, the edges of the nodes here and here. So I've marked those up. That's our analysis. If you'd like to learn how to do this, go down below and join the Zero DTE Academy. It's a school community. We teach you all about trading Zero DTE options and trade in an asymmetric way. In any event, I've marked this up. Let's see. It's really weird. What did I see there? Let's go back to the 5-minute chart. So we left the top of this node, and oh, I see. We are kind of almost up there. See, this is the bottom of that child node right there. This yellow line right here. I'll make it a little bit thicker so you can see. I'm not having good luck here this morning. There it is. I'll make it a little bit thicker. So this is the bottom of a child node. You notice how I have them colored differently. The node, the very large node, excuse me, the very large node below us, I colored the top of the node red and the bottom of the node green. So this we can kind of ignore volume profile in a daily. I mark it up in the, I'm sorry, ignore it in the 5-minute. When we're zoomed out and we are getting the full breadth of all of the price action, that's when I evaluate the nodes. And then zoom in, you don't need the volume profile anymore because we have our markup and we can see where everything is. And you can see very clearly that the nodes, the markup or the structure, not the markup, but the structure, has a huge effect on price action. Now yesterday, what happened yesterday? Yesterday early on, I got into a mother of all flies early on and entered it right about here. Let's see, I'll just use this. I entered it right there. And looking for it to go down. Mother of all flies is where I'm looking for a mispricing in the options chain. And I found it. I found a 50 wide fly for only $3.75, and the front leg was only 3 strikes away from price. So that's incredible. So I put it on, and immediately it went into profit. I was up about $400 or $500 or something like that. But then it reversed on me. So I held on to it because it was a good trade. And what happened was price came up into this structural level. And you notice it definitely found resistance there. So then we rely on my opening score with divergence indicator. This is of my own creation. It's available on TradingView if you're interested. And it will show you where divergences are happening. So it was starting to flash divergences all over. That's the blue and the orange lines. The green and the red lines are for price momentum. Flashing divergence all over the place. So people were waiting for that. They knew that this was going to be a turning point on this structural level. So this is where you would go short on that trade and put an out-of-the-money butterfly down here. And people that took that in our coaching service, I mean, they did really, really well. And also my mother of all flies ended up doing very well as well. So that was a good trading day, another good trading day. So we're going to be looking at what's going to be happening this morning as well. We'll see what the interaction is with the structural levels. And when the morning starts at 9:30, that opening score indicator will start popping up down here. It only pops up during the morning session, as you can see. All right. So there's our structural levels. We have fairly strong one right here at 60.12. And this is this area right here between the red line and this thick yellow line is very low liquidity. So moving up through this at night was relatively easy. Again, I'll move back to the 3-hour chart so that you can see that. Turn on the volume profile. Get rid of the chicken scratch. See, this is why you have to get all the profile in. Because if you don't have a good view of what's going on. So we can get rid of most of this here. We'll just look at that right there. Because all we really care about is up here. So we can see we've left this volume node. That's where I had the red line and the green line up and above, up and down here. Passed through this lower liquidity area last night. And now we're knocking on the door at the bottom of this child node right here. This is kind of frothy here. I don't look at this as especially impactful volume node, but every single one of these lines of demarcation where volume changes to high volume changes to low volume are impactful in terms of our support and resistance, liquidity, illiquidity, that sort of thing. So we'll be looking for it to that perhaps to provide resistance and maybe again move back down here. But it's very possible that we move up and have a rally. The last several weeks on Fridays we've done on Thursdays we've done exactly that. We've had rallies, and then on Fridays we have a sell-off. This time it might be different. It looks like we're a little bit behind the gun here. So maybe this Friday will be a little bit different. We don't have a sell-off. Who knows? That's what makes this exciting. All right. So let's go. That's about it for now. Let's go back to the big head. And as I said, we have month-over-month GDP coming up at in about 16 minutes. We'll be, as soon as I get off here, I'm going to put on my big ass fly to take advantage of the volatility crush after that event. We're going 30 to 35 wide. I'll probably go 35 wide on my out of the money flies today. And we're going to be starting off with put flies, looking for a bearish move, and at those structural levels. So there you are. You're all set. Sorry I didn't have a focus area. I just got up too late. Like I said, wrenched my ankle, so I had to whip this all together. And thank you very much. That's about it, guys. Coach Ernie, out.